Osram Licht reported third quarter profits earlier this morning. The auto parts maker posted revenue and profit that met analyst estimates. It also confirmed its full year forecast. Joining us now on the phone is Ingo, the CFO of Osram Licht, here to discuss the quarterly earnings numbers. We've had a series of profit warnings, but not today. Today looks different, Ingo. Are you convinced that the bad news is behind you?
Hi, Anna. Good morning, and thank you for having me. Q3, we just posted our numbers, slightly ahead of consensus, I would argue. It was still a challenging quarter, good still for our automotive business, but somewhat weaker in our general lighting and industry mobile devices business. The stronger euro compared to last year is still taking its toll on our numbers, had a negative impact of 50 million in revenue and approximately 25 million in adjusted EBITDA. Cash flow was positive for the quarter, which was, I think, very good. And we also took a decision to dispose our luminaires business. That was a long-awaited decision where we took a strategic review, and yesterday we announced that we are putting the unit up for sale.
Earlier this year, I referenced the profit warnings we saw, Ingo. We saw something in April and then a change in guidance again in June. Why did that happen, do you think? And are you convinced that the negatives that drove that are behind the business?
Well, unfortunately, indeed, we had to do that. We saw, basically, if you look at June, three things happening. There were quite some uncertainties in the market for a lot of the automakers. We saw a profit warning starting here in Germany. We saw announcements from car makers to shorten or reduce their production outputs, also related to the tariff discussion, but also to the introduction of WLTP, the new emission standard. And given the fact that we have a fairly big auto part in our business, we had to then review the numbers and adjust. And on top of that, we had postponements of bigger projects in our general lighting and horticulture, as well as in our industry mobile devices business. And all of these three effects together had us to review the numbers and change the outlook for the year. Now, all of these things have been factored into the new guidance. I think we came out a little bit better in the third quarter, so we believe all these factors have been factored in also for the rest of the year.
So in terms of that guidance, Ingo, what are you factoring in terms of the trade conversation and how that impacts on autos or other parts of your business?
Well, it's not so easy to do, as you can imagine, but what we clearly see, we're a tier 2 supplier to the auto industry, so we're not directly close to the OEMs, but what we saw happening is that coming also out of a period of allocation, that the order intake became a bit more uneven from some of our customers, and we saw that a few customers were pushing out orders, not canceling them, but pushing out orders into the future. And that's what we figured out was a sign that there's a bit more uncertainty in the market. There might be also delays here and there with introduction of new cars. And we could sense from the relationships we know between our customers and their end customers that some of the discussions, especially here in Europe around WLTP, had also been reflected in the way our order book has been moving. And that in total was then the revision we had to do on the automotive side of the business.
Ingo, it sounds as if you have a number of things to watch for. The strength of the euro, you've cited that, the fate of the auto sector. You also operate, of course, in a lighting business that is undergoing transformation. As we sit here in the middle of 2018, then, what is your biggest concern for the second half?
Well, we are obviously now, we just finished our third quarter, and we have a good visibility on our fourth quarter. We're now in the process of looking into our next fiscal year with our normal planning. And we're very carefully monitoring, especially the situation around general lighting, especially for the auto market, as well as for the dynamics we see here and there on the automotive side, also given the recent profit warnings of some of the OEMs. Those are the things we're currently watching. It's very short-term things that we're watching. We don't think that it's a longer-term issue. It's a mid-term thing where also supply chains probably are being corrected, especially also in the general lighting industry, and we're just trying to find out right now how long that correction will take.
And your stock is down partly because of those profit warnings, Ingo, I'm sure, some 50% or so this year. What can you tell investors then to comfort them about the rest of the year?
Well, we have taken additional measures on the cost side. So we've just finalized a bargaining agreement here in Germany to adjust our cost structure, both in some of our plans as well as in some of the overhead areas. We've also made a portfolio decision to sell our luminaire business. So we're taking steps to further our profitability and to counter some of the headwinds we see from a market, as well as we are continuing to streamline and align our portfolio. So I think that should be reassuring also for the future.